What if I told you one 3-digit number could quietly shape some of the biggest financial decisions in your life without you even realizing it? It can affect where you live, how much you pay for a car, and whether you qualify for a mortgage. But here's the surprising part. Most people have never actually been taught what a credit score actually is. So today we're going to change that. By the end of this video, you'll understand what a credit score measures, what actually affects it, and which factors matter the most. So you can stop guessing and start making confident financial decisions. If you only remember one thing, just one from today's video, remember this. A credit score isn't a grade on whether you're good with money. It's a prediction of how likely you are to repay borrowed money. And a credit card is still considered borrowed money. So once you understand that, everything else starts to make more sense. So first we need to know, what is a credit score? A credit score is a 3-digit number, usually somewhere between 300 and 850. It exists for one reason, and that is to help lenders predict risk. It's not a measure of how smart you are. It's not a measure of your self-worth. It's a statistical snapshot that lenders use to estimate how likely you are to repay what you borrow. And that's based on your credit history. Most people have heard of a FICO score because it's the most widely used, and it's exclusively used in some industries like mortgages. And it is also used in auto loans, although they do use Vantage Score 4 as well. So Vantage Score 4 is something that measures the same things, but it weights them differently, and it's not nearly as widely used as of right now. So most of what we'll be talking about is the FICO score, but in reality, if that's in good shape, everything else falls into place. You know, it does so pretty well at least. Your score is built from 5 factors. 1, payment history. 2, credit utilization. 3, length of credit history. 4, new credit. And 5 is the credit mix. Last time we talked about utilization because it's one of the biggest pieces of this puzzle. Today we're covering all 5 at a high level. Each one gets its own deep dive down the line. So what doesn't affect your credit score? Just as important as what's on the list is what's not. And one of those is your income, your bank balance, your marital status, your education, your career, and your age. That's directly because they can use the length of your credit history to have a general idea of how old you probably are, but that's not a factor that they really look at. You could have a high income and a low score, or a modest income and an excellent score, and they're not the same thing. And lenders don't treat them as the same thing. So why does all of this even matter? Okay, here's where it stops being abstract. So let's say you're financing a $25,000 car over 5 years. Good luck finding one, right? But according to Experian's Q1 2026 State of the Automotive Finance Market data, someone in the super prime tier, which is a FICO adjacent score of 781 or above, they're averaging right now 4.55% interest on that new car loan. Someone in the deep subprime tier, they have a 3 to 500 score, that's averaging 16.01%. And used car rates are typically higher. On that same $25,000 loan, that's roughly $140 difference in your monthly payment. And that equates out to about $8,500 more in total interest paid over the life of that loan for the exact same car. That same pattern shows up in mortgages, apartment applications that run a credit check, and sometimes insurance premiums, or whether you'll have to put down a deposit for utilities where you live. Before you watch another finance video, I want you to go check your credit score. And not because that number defines you, but because confident decisions begin with accurate information. So there are 3 steps that you can take to do this today. First, pull your free credit report at annualcreditreport.com. It's a federally authorized source. You can also check whether your bank or credit card issuer already shows you a free score. A lot of them do. And write that score range down. You'll see different scores on TransUnion, Equifax, and Experian. You can pull them from Credit Karma, or you can also pull them from Experian's app as well. So 3 things to remember about your credit score. It predicts risk, not character. It isn't a judgment on whether you're good with money. And it can improve, starting with what you do today. Every financial concept that you understand gives you a little more control over your money and a little more confidence in your financial decisions. Remember, you have more control than you think. You've got this. And if today's video helped you understand your credit score just a little bit better, next I'd recommend watching my video on credit utilization, since it's one of the biggest factors affecting that credit score number. I'll link it right here.